Good evening, everyone, and welcome to this Monday's edition of The Money Show. This is the only show of its kind where we get you top financial experts to answer all your queries, be it mutual funds, be it on taxes, insurance, you name it. We've got these answers ready for you on the show. So what are you waiting for? If you have any questions, email us on themoneyshow@etnow.tv, reach out to us on Invol, or dial in on the number on your screens. Well, let's bring on board our guest who will be guiding us over the next half hour. Kalpesh is a certified financial planner who is now joining in on the show. Kalpesh, good evening and great to have you with us on the show. Well, to begin with, I can't help but talk about the recent news break, which was with respect to what the Reserve Bank did. They went ahead and hiked the repo rates. I want to understand the implications that this has on customers and people like you and me. On account of this, we've seen the loan EMIs rise post the RBI rate hike. What exactly is your advice on the impact that this will have on customers and how they should go about this?
You've just seen in the RBI credit policy meeting yesterday that in fact after a period of 4 years there's been a rate hike taken by RBI, and unfortunately that's not good news for all the people who are in the loan borrowing phase. So as we are now into a stage where we should brace ourselves that this is not going to come down in a hurry, and all the borrowers in fact should be ready for increased EMIs, and also in certain cases for existing in all the existing people who have a loan, they could be looking at a higher tenure of the repayment. And in fact, in the recent, I think just a couple of days back or a week back, the MCLR rates were increased by the banks, the internal benchmark rate on which the floating rate loans are decided, and that itself was a signal that we are looking at a higher EMI type of a structure for all the people who are borrowing. Now, on that note, I would like to sound a word of caution for people who are about to take new loans or are contemplating doing it. So, we come from a financial planning profession, and we always tell our customers or our clients that only take a home loan if it is your first house and you have the sufficient wherewithal to make the down payment and the EMIs simultaneously once you are in the thing. So this becomes very, very important in this stage, that only take a loan if it is absolutely necessary, and don't fall into the pit of just buying a second house or a third house, and that too supported by a loan, because it's going to cost you a lot. And apart from that, like we've seen, the domino effect of it goes on to the other types of loans, which is your personal loans, your car loans. And there too, again, if it is not necessary at all to enhance your lifestyle with a loan, please avoid those things, because those things will absolutely, create a dent in your wallet and your cash flow. The reason I would, stress that why these rate hikes are being undertaken by RBI after a gap of almost 4 years, and I would straight attribute it to the very dreaded three enemies of the borrower or the people who avail of a home loan, which is nothing but that in the last 1 year or 2 years we have not seen anything of this kind, that the oil prices, which are touching almost $75 to $80 are on the rise, are on the boil. Then you have your 10-year government bonds, the yield of that touching almost 8%, and both of this having an impact on the inflation, which according to RBI has yet not been brought under control or could not be moderated as such. So this, the trinity, as I would say, is a very big barrier for the RBI, and hence they have taken this call of increasing the rates right now, the repo rates, and that is what is causing basically the increase in the EMIs for all the people who are availing of a home loan. And here also I would like to state one more thing, is that in case if people who are thinking of availing a new loan should go in for a floating rate home loan and not go for the fixed rate home loan, because as we've seen that not very far back we had a scenario where the interest rates were on the downside and home loans had in fact become cheaper. So though the scenario is right now is very hardened and grim, we cannot rule out that in the near future that there could be a reversal and we could see a downside in this also. And that is where your floating rate is useful to you, and you could avail of lower interest rates at that point of time.
So we've understood the impact there, and clearly, you've been fairly categorical, Kalpesh, in saying avail loans only right now if it's absolutely necessary. Personal, loans should be stayed away from as of now. But let's also understand what the implications of this would be on debt fund investors, because, we have seen that the returns on debt funds have been far lesser than fixed deposits. So what is your advice? Do you think that on account of this rate hike, we are likely to see more choppiness come in? Do you think that investors who are looking at debt funds can see substantial returns? Should they avoid this as well as of now? What's your advice?
The rate hike on debt fund investors also is not good news, like the people who are availing of a home loan. So even the debt fund segment, as it is for the past 1 year, people who've been following it, people who've been investing in debt funds, have not had a very smooth ride at all. It's been very choppy. The returns have been very below average, and in fact they have not even beaten your FD rates, which is very surprising in the 1 year, and that has left a lot of debt fund investors disheartened. Now added on to that, when there is a rate hike, that also after a period of almost 4 years, it surely signals one thing, that all the funds which are into the long term or the long duration funds, the gilt funds which have a high duration holding in them, are surely not the ones which are going to be favored or should not be favored in fact. And especially for the retail investor, this is the right time that they should be looking at investing in either as per their time horizon, their investment horizon, their needs. They should be selecting the funds which are on the shorter side. So if you could have an investment horizon of as less as say 1 week to 3 months, you have the liquid fund space for you. If you have an investment time horizon of say 3 months to 1 year, you could be looking at the ultra short term, which is now classified as the low duration scenario, the funds. And if you are a little bit, looking at a longer time horizon, that is anything between 1 year to 3 years, there used to be the short-term category. Now it has been classified as a corporate bond in certain funds. So there also be very careful, look at only the funds which have a holding of high quality corporate bond paper with them with a low duration. So look at all these factors, but surely one thing needs to be understood here, that even the fund managers in certain cases where investors have placed their trust, I'm referring to the dynamic bond fund categories, where the fund manager has a mandate to shift from the long duration to the shorter duration as per his discretion, and his judgment has not been up to the mark. And even the people who've invested in dynamic bond fund categories have really been underperforming and seeing very dismal type of returns. So the way to go out here for debt fund investors who faced a choppy ride, and there could be a choppy ride ahead, is just stick simply to either the liquid ultra short term or maximum the short term. Don't aspire for great returns in the debt funds, at least in the near future.
Okay, let's move right on, Kalpesh, and get those viewer queries answered. And as I'm saying, if you have any questions or queries on personal finance, why don't you reach out to us on the Money Show at etnow.tv. Well, Swaroop Majumdar has reached out to us from Kolkata. He says, I have invested in Aditya Birla Sun Life Advantage Fund, which has been underperforming for the last 1 year. The fund is going through changes due to the recategorization norms by SEBI. Do I remain invested? Now, I'm sure, Kalpesh, a lot of viewers have this question. When it comes to the recategorization, What are the implications of this on individual funds? And let's talk in specifics about Aditya Birla Sun Life Advantage Fund. It has been an underperformer, but how closely should one look at the sort of daily performance or monthly performance of a mutual fund? Do you think that Swarupya should ride it out, continue to remain invested in this fund, which is now the, should he continue to stay invested, or do you believe that he should put his money in another fund?
Swarup, you're absolutely right. The fund which you have mentioned, the erstwhile Aditya Birla Sun Life Advantage Fund, which has now been renamed as the Aditya Birla Equity Advantage Fund. By nature, it has always been an aggressive multi-cap fund. And if you were to study the fact sheets and everything, the calls in this fund by the fund manager and as per the fund, the principles by which it goes, they invest predominantly in stocks which are on the growth path or the growth mode rather than investing in the value mode of investment. So obviously these are a little bit high beta type of stocks, and they would do exceedingly well in a bullish stage. But my suggestion is, if you've just been in this fund for a year, it's too early to take a call. Ideal would be that you stick with this, because even the fund manager in this is pretty good and this fund has a good track record.
Okay, so look to stay invested in this fund, the Aditya Birla Equity Advantage Fund as it's now called. It's fundamentally good. It has an efficient fund manager, which is also very important. So I know, Swarup, you may be a little bit perturbed, but Kalpesh believes that the right call would be for you to stay invested. If you have any questions, log on to Involve, tweet to us, or simply email us on themoneyshow@ttnow.tv. Well, let's get on our next question and jump from Jammu and Kashmir. We have Nagesh, who has emailed us. He says, I'm 33 years old and I have 3 SIPs of 5,000 rupees each. I've been investing for the last 6 months now. His goal, he wants to earn 2 crores in the next 15 years and also have the capacity to steadily increase his SIPs by 10% per annum. Should I shift from a regular to a direct plan, given the time horizon is 15 years, wherein the differential expense ratio upon compounding can make a big difference in the corpus on majority, is what he asks. Well, let's find out which funds he's currently holding. He's got the Aditya Birla Sun Life Infrastructure Fund, Aditya Birla Sun Life Mid and Small and Mid Cap Fund, as well as the ABSL Balance 95 Fund Growth Regular Plan. So clearly, we have continually gotten questions on the Aditya Birla group of mutual funds. Out of these 3, what is your assessment? Do you think that on achieving his goal, that he wants to get 2 crore rupees, that he's on the right path, or do you believe that he needs to mix up his portfolio, make some key chops and changes?
Nagesh, you seem to be a very well-informed investor. First, let's get the arithmetic part of it right, that you wish to accumulate a corpus of 2 crore in 15 years. So just giving a conservative equity-based return over this long period, calculated at around 12% CAGR, you would need to do an SIP of around 40,000 per month in equity-based mutual funds to reach your target of 2 crore. Now, you've started off well. You're doing an SIP of 15,000 and you've said that you would give it a top up of 10%. That's a good way of doing it. But I think you need to, hasten up a little bit more to reach that target which you are already looking at. Now, coming to the choice of funds which you've got with you, Nagesh, a simple advice here is, you should not look at only one fund house or an AMC for all your investments. I think that's one fundamental rule which I would advise all the people, that we have a very wide variety of fund houses. So you can take limited schemes, but you have a choice of exploring the style and the pedigree of at least 4 to 5 fund houses. So do not concentrate everything in one fund house. As far as the funds which you've chosen for the long term, I would like to say that out of all the 3 funds which you have, my very candid suggestion would be that just stick to the ABSL Small and Mid Cap Fund. And because you have a long way to go, you need the 40,000 SIP to be done. I would suggest you make a little bit of a balanced portfolio. In the multi-cap, you can go for the ABSL Equity Fund. In the large cap, you could go in for the ICICI Prudential Blue Chip Fund, the SBI Blue Chip Fund, that covers the large cap universe, and the ICICI Prudential Balanced Advantage. So that will make a good portfolio of multi-cap, large cap and small caps in your portfolio.
All right. Thanks very much for that advice. That's clearly the call coming in. You've made the right start looking to achieve your goal. You need to start, with an SIP of about 40,000 rupees per month. He's given you some funds as well that you can look to invest in. On that note, here's our quote of the day, and as you read it, take a quick break. Come right back. Kalpesh Ashar is still with us to answer your personal finance questions, so keep them coming. Welcome back. This is the Money Show, and we are addressing all your personal finance questions. If you have a question on mutual funds, tax, insurance, please do reach out to us on the Money Show at etnow.tv. We will get them answered. Today we have our guest with us, Kalpesh Ashar. He's certified financial planner, and he is helping and guiding our viewers through all their personal finance related queries. Well, now it's time for the fund review segment. Today we are going to review a fund, and that is the IDFC Core Equities Fund. It's an equity multi-cap fund, has assets of about 2,889 crore rupees, and it has some key holdings like HDFC Bank, L&T, ITC. In the last 1 month, it's declined 1%, and in the last 5 years has gained about 17.7%. What is Kalpesh Ashar's assessment? Does he like this fund? And question is, how much does he rate it on 10? Over to you, Kalpesh. Is this fund hot or not?
Now the IDFC Core Equity Fund, which was, again, it's been renamed here. It used to be called the IDFC Classic Equity Fund. It's a pure multi-cap fund, it's got its holding around 55% in large cap and 45% in mid cap. And it's being held by a very seasoned fund manager now since the past couple of years. But to be very honest, out here, if you see the returns of this fund, there's hardly any year where, right from the last 1 year record to the last 7 to 10 year record, where it has outrightly by a margin beaten the benchmark. Now that's not good news for a mutual fund investor investing specifically in a multi-cap fund for a longer horizon. Because the core, the competition is that the fund manager or the fund should beat the benchmark by a reasonable or a sizable type of a margin. It's failed to do so. So my view or my suggestion on this fund is that in the multi-cap fund universe where it operates, there are better funds to choose from. And it's been a very slow performer. It's surely not one of the most favored funds. It's not bad either, but you don't look for these type of funds for a longer investment horizon. To sum it up, I would give it a rating of 5 on 10.
Okay, so a 5 on 10 coming in on that fund, and clearly the outlook is that it's not that promising. Well, we've got more viewer queries, and let's take on board Reena Malik's portfolio and what her question is. Well, she says, I have invested in Franklin Blue Chip Prima and Franklin Blue Chip and Prima Plus funds, but these funds have not been performing over the last 3 years. The question is, should I switch or redeem? Kalpesh, let's find out. Investing in the right fund does seem to be fairly important. You have seen the track record, and these funds have not really been doing all that well. What are the funds that you would suggest she should hold in her portfolio? Although she's not really given us any sort of goal or how much money she would like to make at the end of this, but what's your outlook on these funds?
Reena, that's a very proper observation, but here I would like to draw your attention to a couple of things. One is that the Franklin Blue Chip and the Franklin Prima Plus have been one of the benchmarks or the one well-known funds over the years. They've been there for a long time. They've witnessed many market cycles, and they've been very well-performing funds. So coming back to your query which you have, it's not unfounded at all. You're quite right in your observation. But here I would say that it's been 3 years, and last 1 year has been very bad. In fact, for the markets, at least for the 6 months, have been bad. And Franklin Blue Chip, the large cap category, my suggestion is you can stick with it. But you have a better choice in the multi-cap space, And here I would suggest that in case you wish to take a call switching out from the Prema Plus, you could look at the Aditya Birla Sun Life Equity Fund in the multi-cap category.
Okay, I hope you've taken note of that advice coming in on your entire portfolio, and a multi-cap fund like Aditya Birla Sun Life Equity Fund. That's something that Kalpesh is suggesting. Well, we have another question, an email query, and if you have any questions as well, please feel free to email us on themoneyshow@etnow.tv. We promise to get it answered. If not today, then tomorrow or day after on The Money Show. Well, Varad Pathak has emailed us. He says, I'm 26 and an IT professional. I'm investing in mutual funds since July 2015 and I wish to create wealth in the next 15 to 20 years. I have a PPF account and FD investments as well. Can you please review my portfolio? So let's find out some of the mutual funds that he's holding. It's the Canara Robeco Emerging Equities Funds where he's put in 3,000. Edelweiss Dynamic Equity Fund, 2,000 rupees there. He's put in 3,000 in IDBI Diversified Equity Fund. He's also got investments in L&T Tax Advantage Fund at about 5,000 rupees. 1,000 rupees have been invested in Tata Retirement Saving Funds, and he says for the Tata Retirement Fund, I have given a step up of 1,000 rupees every year with a maximum cap of 3,000 rupees per month SIP. So let's understand how you've looked at his overall portfolio. He's young, he's got a long-term time horizon, he wants to create enough wealth. What exactly would you tell him to do? How many tweaks and changes, Kalpesh, ideally should he be making?
One thing in your portfolio, Mr. Varad, is that you're talking about the Tata Retirement Savings Fund. Now, the Tata Retirement Savings Fund, you've not sent in the full details, but has got three different options. So one is the moderate, one is the conservative, and one is the progressive. So it's obvious that it's as per the different risks which an investor would like to take. Now, I would just like to, because your time horizon is long and your aim is wealth creation, it's obvious that the progressive option in the Tata Retirement Savings Fund is the one you would be looking at, because that in fact is the one which is performing very well. It's got a brilliant portfolio, it's being managed well, and I would suggest that you continue with it. In fact, a little bit more amount can be allocated towards that, but keep monitoring it and keep reviewing it. Now, regarding the other three funds which you have, my suggestion here is that the Canara Robeco Emerging Equities Fund is a good fund that can be continued, as well the Tax Saver Fund. But as far as the Edelweiss Dynamic Equity Advantage and the IDBI Diversified Equity which you mentioned, I feel there are better options here to give your portfolio a more balanced and a more stable one for the long run. You could look at the ICICI Prudential Blue Chip Fund, which invests in all the large cap companies. It's a very well managed fund and the records speak for themselves. And in the multi-cap category, you could look at the Aditya Birla Sun Life Equity Fund, or if you want an index fund in the multi-cap category, the ICICI Prudential Nifty Next 50 Index Fund is also a good option. So keep investing regularly. You've got a long way to go. And keep your PPF investments also intact, because that is one which gives the fixed income part of your portfolio more credibility. And instead of FDs, you could also look at some debt funds if you have a 3 to 5 year horizon. So all in all, you're on the right path. Just make these small changes, I think should be okay.
Otherwise, IDBI schemes, you can look to exit it, but you're on the right path, and that's important. Some debt funds as well is what Kalpesh has advised. And I just request our viewers, if you send us your mutual fund portfolio, please do so by all means. But if you could tell us a goal that you have in mind or how much money you would like to make, that would definitely be more helpful for the guest. Well, Kalpesh, now I'd like to end with a sort of a tip of the day, if you will. You did mention that you should not look at only one fund house or AMC for all investments. Why do you think this is important?
See, this is a very crucial point here, because as it is, the crux of mutual funds is diversification. And when we say diversification through mutual funds, we are diversifying into various market caps of what we have in the capital market. So you have the large caps, the mid caps, the small caps, the balanced fund category, then you have the debt funds. Now, that diversification is automatically done when you invest in a mutual fund. The AMC, or what we say the fund house, why we want that to be a bit different when we have the choices, because each one of them has their own ideologies, each one of them has their own profiles, the way of looking at the markets, their own analysis.
All right, Kalpesh, point noted, but I'm afraid we're completely out of time. Thanks so much for joining in today on the show. With that, it's a complete wrap. Thanks for watching.